Well, g'day there traders and friends right around the world. Thanks for joining me on this weekend market update. It collectively appears as though participants trading all three of the US markets are not going to allow the market to set up an intermediate reversal. We came into the week on Monday really 50-50 on what could potentially unfold for the upcoming week. We came in very, very neutral. We were mindful that we were on the precipice of inflicting some serious technical damage if in fact we started to break below these old resistance levels, turn new support, and also this Fibonacci retracement box. As you can see, we struggled to break down below that box, below those levels of support. And on Wednesday and Thursday alone, it was the biggest two-day rally of 2014. I think it's safe to assume that the downside, or at least I guess evaluating and analyzing any downside move as we transition or round out 2014 is quite minimal, given of course what has occurred this week. Now, having said that, do we want to start getting active at these all-time highs? Given that we are moving into a shortened trading week, it is going to be in a 3.5 day trading week. Of course, we are closed Christmas and we have a shortened half-day trading week on the 24th. Or is this potentially a good idea to sit back, reflect on what has occurred for 2014, and to write down a plan as we transition into January 2015? Personally, I tend to agree with the later of those. I've gone through a lot of these trades on our top 13 individual trade list. As a matter of fact, I'm about to record pro for this weekend as at Saturday, the 20th of December. There are some pretty decent trades that I'm starting to formulate, which I'm very excited to bring to those students in that class. But I just want you to be mindful also of what has occurred this week in the market, where we sit moving into Christmas and of course the new year, and how your account looks relative to, of course, the opportunity being presented over the next 3.5 days. Is this really a period in time where you want to be forcing trades, or sitting back and of course reevaluating, reflecting on what has occurred and how to better position yourself moving into or beginning 2015? That's the general question that I'm asking people in this weekend market update. I know the answer personally for myself is of the later. I do hope and intend that that is the case for you also. So I do believe this is going to be, of course, the last weekend market update before Christmas. So I do want to say, everyone around the world, I hope you do have a fantastic Christmas with friends and family. Enjoy the time away from the market. I hope you give a lot to those who mean, of course, a lot to you. Christmas, in my opinion, and New Year's, or the whole festive season, is by far the most important and my favorite part of the year each and every year. I do wish you a very Merry Christmas and a Happy New Year. Other than that, I am about to record, of course, this week's pro analysis class, and I will be with you next week to give you intermittent market updates. I will most likely just provide a Monday and a Tuesday, and possibly a Friday. We'll see if the market gives us any extraordinary types of momentum moves. I'm not holding my breath on that simple fact. So I do ask for your pardon, given where we sit seasonally, and of course the opportunity being presented in the market. A quick run through of some interesting stocks which have made significant movements. A lot of stocks have made whipsaw moves to the downside, and they're starting to jump back up, or at least basing sideways. That's really the theme of last week. That is current with Apple. You can see right here, it's still battling with that primary trend line. Amazon is trying to hold the breakdown from 300. Baidu, very, very neutral, holding this macro pivot point. Looks as if we're starting to see that momentum to the upside. Caterpillar is holding that macro pivot point, that support level, which is very, very important around here at $90 a share. Very excited for that moving forward. Disney this week is still struggling to break out above those all-time highs. Some decent volume coming in on Friday. A lot of that is due to options expiration, so don't get too caught up on the volume spike taking place across all three of the US markets. FAS is very neutral, at a very nice pivot point on that particular ETF. Facebook bouncing off from that primary trend line. It looked as if we were about to break down earlier in the week, but you can see three nice candlesticks. This is what we call three white soldiers to the upside. It's usually the kickstart of potentially a new trend if in fact we are above resistance. That is not the case. We're still contending with an open window. We have technically closed it as at Friday. We do have a little swing high. So Facebook is very neutral. It's at a pivot point. I really genuinely like that trade setup, which I'm about to, of course, let students know in that analysis class over the next hour or two. Google, again, is sort of basing around this 500 level. Very, very excited for any downside break below this level. We're still technically trending. We're making a series of lower highs and lower lows. The trend is still down. We're breaking support levels. Yes, we have two pretty bullish candlesticks, but when you couple that, or at least compare it to the declining exponential moving averages, you're really struggling to get involved in Google on the bullish side, moving into trading beginning Monday, the 22nd of December. HAL is interesting. It seems that we are basing short term, and again, we're expecting a bullish bounce to the upside. This next bullish bounce, I do believe, is going to be, unfortunately, the next shorting opportunity once we get back up to these levels. I've had a lot of people email in who are actually long HAL, and they're sitting underwater on a couple of positions, which is unfortunate. If you do get up to the open of this window, it might be time to cut your losses. If you can possibly break even, that's exceptional. But you can see how that psychology naturally comes back into the market and induces people to sell at a very real level of resistance. That's the psychology and the reason why technical analysis works. People say to themselves, if only I can break even, I will sell my stock and move on. Unfortunately, it's all too late, and the selling pressure comes back in. Netflix, again, is basing right at this support level, this macro support level. Very, very neutral trade setup on Netflix. Starbucks, again, although the market has rallied exceptionally, some very, very strong bearish early reversal candle signals on decent volume taking place. It would not surprise me to see Starbucks continue to sell off as we round out 2014. Tesla this week is really gapped based off this beautiful engulfing candlestick pattern at support. You can see, if I zoom in, we have a very, very nice gap. This could be what we call a nice breakaway gap. This is the kickstart of a new bullish trend to the upside. And even on Friday, this candlestick here is what we call a hangman at a resistance level. But again, you can see the buying pressure, buying the bid or the price of the stock up intraday as it sold off to about $214.15. It closed at $219.30. There still is definitely buying opportunity, or at least buying volume coming in. However, when we're looking at this from a trend perspective, yes, we have the bearish exponential moving average cross. We've broken the support level. We're coming back up to retest it. This is also a very reasonable type of location where we retest old support as new resistance and we quickly fail. So I'm still pretty neutral on Tesla. Mixed signals, you can interpret it as you want. I will give you a very clear and concise breakdown in that pro analysis class. And to conclude with, we have Twitter right here. It is basing all around about $35 and $37. I was telling you, you want to watch the Bollinger Bands because I do believe they are going to give us a squeeze. Very neutral trade setup this week, which I'm about to again explain to students in that analysis class. So, ladies and gentlemen, again, that is it for the weekend update. I do wish you all a very, very Merry Christmas and a Happy New Year. You will hear from me, of course, before then. But please use this time to refresh yourself, to reflect, to find your strengths and weaknesses, and of course make a pact to yourself to improve on those weaknesses. Send me an email, success@pivotpoint-trading.com, if you do want to touch base with me. Always happy to write back to emails, meet new people every single day, and I also schedule a lot of phone calls to people around the world, people I haven't met, others which I'm on a more daily sort of call schedule with, just generally passionate about the markets and helping other people unlock the professional way how to trade financial markets. All right, ladies and gentlemen, have a fantastic weekend. I look forward to hearing and speaking to you all next week. Have a great weekend. Goodbye.